Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. Well, it's Monday. Markets are back open. We're having a little bit of an update. Dow's up about 100. NASDAQ's up about 100. We had that down week last week, and we're trying to bounce off these lows. Okay, so the NASDAQ, it's sitting at its 200-day, and it's bounced off a little bit. The S&P, it's sitting at its 50-day, bounced up a little bit. We may get a little bit of rally continuation tomorrow also, but this would, in my opinion, present a good shorting opportunity. Now the Dow Jones has already given up all of its gains for the year. The Dow Jones is no longer up for the year. The Dow Jones has given away all of its gains, and I expect the same to happen in the S&P and the NASDAQ. They're going to give up all those gains they made in January. Remember, January we rallied up, and now we've already come back. We started the down leg, but nothing goes straight down, right? So we're getting a little bounce here, and maybe we get another rally, but all rallies, they're going to be met by the short sellers. The short sellers are going to be pouncing on any rally that comes along, trying to send this market lower. This market's going lower. I think we're still going to take out the October lows, which is bring us down to 3,400 on the S&P. That's October lows, not going to hold. There was no capitulation in the October low. There was not enough pain in the market yet. I still think this bear market's got a little bit of to play out to the downside. Once again, just my take. Your take might be completely different. Maybe you think we're in a new bull market that's on the way up. That's not the way I see it. Anyways, let's get over to the real estate market now. Over the weekend, a lot of articles came out, and a lot of articles, some contradict each other. All right. So let's start with the first one. Okay, so pending home sales jumped 8% in January. The pending home sales jumped 8% for January, okay? Well, what they don't tell you in that article is that, well, they're down 25% for the year, even though they did have a little tick up in January. Now, we also know that new home sales had an uptick in January also. And the narrative is that the buyers are rushing to get into this marketplace before interest rates go higher. So everybody's running to get in. The housing market is actually starting to rebound in January. That's the narrative. Now, the real take is this other article. The housing recovery has stalled. Now, I don't believe there ever was a housing recovery. Once again, just like the stock market, nothing goes straight up, nothing goes straight down. But this next article says that the housing recovery has stalled. They say we had a recovery in January. It wasn't much of a recovery, really. Prices didn't go up. Maybe some buyers came in when the rates went from 7% on mortgages down to 6% on mortgages. But that recovery has already stalled. Now, they say hundreds of thousands of home buyers are backing out of deals that they made. Now, the reason they're backing out of the deal is because it was no deal at all. Home prices are inflated high. Mortgage rates have doubled in the last year. So this is not a really good time to buy. So the home buyers starting to disappear, right? Now, the mortgage business, oh, it's just getting hit hard. Down over 40% mortgages. There's mortgage applications. Nobody's putting in applications to buy homes, down 40% year over year. This is the worst it's been in 28 years. This takes out that 2008. Now, everybody talks about comparing this to the 2008 bubble. Well, the 2008 bubble was not as big of a bubble, so this bubble is going to pop much harder than the 2008 bubble. Now, people don't believe that. People don't believe that this bubble is going to pop like the 2008 bubble popped. 2008 bubble only went down about 34% when it popped. Now, I think this bubble is going to come down by 50%. 50%. Now, why do I think that? Well, here's what a lot of people don't understand. Okay, so the real estate market has already lost $2.3 trillion of equity. Equity's gone down by $2.3 trillion. This is a number directly out of Redfin. So $2.3 trillion has already been wiped out. But you can barely feel the pain yet. There's no capitulation. This has much more downside left in it. And of course, that $2.3 trillion that we've come down, none of that was in your area because your area is still up and still going higher. But overall, the nation as a whole whole has lost $2.3 trillion of home equity. Now, people look at this as purchasing power, right? If you were to sell your house and you got out where Billy Bob did, you'd have more purchasing power than if you sold your house now, because they're down about 10% and $2.3 trillion has been wiped out. Well, here's what people don't understand. Before the pandemic started, this goes back to 2019, before the pandemic started, the house market was already starting to get weak. It was already starting to roll over. It was already in trouble. Well, what happened? Well, the pandemic hit and we printed $7 trillion in 2 years of money that just printed into existence, right? It didn't exist before. Now we got an extra $7 trillion. Well, that money had to go somewhere. Where did it go? Well, it went to prop up the housing market, also the stock market, and any other asset that the $7 trillion could get into. But so the housing bubble that was starting to pop in 2019 kind of got a reprieve, right? So it jumped 20% a year in 2020, 20% a year in 2021. So up 40%. That $20 trillion sent us up 40% higher, right? Okay, so what happened? Well, the mortgage rates have doubled just in the last year. A year ago, they were sitting around 3%. Now we're around 7%. So the mortgage rates have doubled. The houses went up by 40%. Okay, so we're at a completely unaffordable level. Nobody can afford to buy these, right? Okay, so no one can afford to buy these homes at these prices. The housing market is in big trouble here. All right. So now what happens? Well, we got all these job losses coming. We have a lot of job losses. They're being reported every day almost, right? A new company comes out with announcements of layoffs. Now, the layoffs are just starting. They're just starting. The recession hasn't hit yet. Now, how do I know we're going into a recession? Well, we got this big inverted yield curve. Believe me, a recession's coming. Now, they may be able to hold the recession off till the end of the year, and I believe that they probably will. But if you sit back and you watch, you're going to see the houses starting to roll over. You're going to see them starting to drop like a rock, as a matter of fact. It's a disaster that's waiting to happen. Actually, the disaster is getting very ready to happen. Okay. So what we got is the prices, they've started to come down. Now, when prices start to come down, what happens to FOMO, the fear of missing out? If prices are dropping, is anyone afraid of missing out? No, they're afraid of getting in because they see the prices dropping. So the FOMO has gone away, right? And as we get into the recession, as foreclosures start to pile onto the marketplace, they're starting to surge higher. The foreclosures, right? They're starting to pile on. They're starting to escalate. Now, not in your area. There's not going to be any foreclosures there, but the foreclosures are going to be coming onto the marketplace. The forced selling is going to increase the inventory. When you increase the inventory, what's probably going to happen? The buyers, remember, the buyers have gone away. The mortgage business down over 40%. No one's applying for a mortgage. So the buyers are pretty non-existent, but the inventory is starting to go up. It's going to put this downward pressure on prices. Okay. Now, here's the thing. Why do people compare this housing market, this big bubble, to the 2008 bubble? Okay, so we had the bubble about this big in 2008. It's much bigger now, much, much bigger. You can just look at a chart. Look at prices. Prices are much higher than they were in 2008. But let's think about what happened since 2008. Okay. I talk about this a lot, but in 2008, we were, as a nation, we were about $10 trillion in debt. Okay, 2008, we were $10 trillion in debt. What are we in debt right now? Well, we're in debt $32 trillion, from 10 trillion to 32 trillion. So we printed $22 trillion to inflate this housing bubble, 22 trillion. And that's just since 2008. You can look at this, go on the Fed's website and look at it for yourself. Okay, anyways, 10 trillion in debt to 32 trillion. Okay, so we printed 22 trillion. But it's worse than that. It's worse than that. In 2008, the Fed's balance sheet was $1 trillion. $1 trillion trillion. Fed's balance sheet right now, approximately $9 trillion. Well, what did the Federal Reserve do to go from $1 trillion to $9 trillion? Well, $3 trillion of that was buying mortgage-backed securities. They buy all the mortgage-backed securities to suppress the mortgage rate so people will buy homes. Now, what do you think we would be at right now if we did not print the $22 trillion in the debt, okay? And if the Federal Reserve didn't buy another $8 trillion, so that's $30 trillion. Just since 2008, $30 trillion that we've added to the marketplace. Well, of course houses went up, right? Of course they went up. Now, if they want to keep them at this level, they're going to have to continue to print money. And they're going to have to continue to print at a faster rate than they've been printing. We've gotten $30 trillion since 2008. Now, let's say the next 10 years. How many of you believe we can print another 30, would probably have to be double that, another $60 trillion? You see, when I was in economics school, I was an economics major, and we didn't talk about modern monetary theory. Okay, modern monetary theory says you can print money into oblivion and not do any harm, meaning no one ever has to pay taxes again because we can just print the money for taxes, right? Well, you see, there's no such thing as a free lunch. Now, maybe my generation got it all wrong, and there is a free lunch, and you can just keep printing money into oblivion to keep everything propped up and just keep handing people money, keep handing stimulus checks. Let's print everybody $1 million. Everybody can be a millionaire. Then we can print everybody $1 billion, and they can be a billionaire, and so on. Well, this does harm. People don't get, and we're starting to see that harm being done right now. That harm is being done in the form of inflation. Inflation comes. Now, if we don't want to hyperinflate, we're going to have to do something about the debt. Now, we got the debt ceiling thing coming, and we're going to raise the debt ceiling because we can't pay our bills. That's why we're going to raise the debt ceiling, because we're the poorest country the world has ever seen. We don't have any money. We're flat broke. We're $32 trillion in debt. The Fed's balance sheet's at $8 or $9 trillion. Look, this is a problem. This is a problem. But this is what we've been doing since 2008. Now, if you know a country, any country in the world history, in the history of the world, that has been able to print themselves to prosperity, please leave me a comment. I would like to know what that country is, because no country can print their way to prosperity. Although we're giving it a try right now, we're going to try to do it until this thing blows up in our face. Now, what happens when it blows up in our face? Well, there's different opinions. There's going to be the Great Reset. We're going to reset money where something else. The dollar's going to go away. Dollar's going to become completely worthless, and we're going to reset the currency. Okay, that's possible. Others think we're going to go Mad Max style, where it's every man for themselves, and it's just going to be complete chaos. That's another possibility, but this will blow up at some point. Now, also, if you would, in the comments, leave me a dollar value that you think where the debt bubble will explode. We're at 32 trillion now. Do you think we'll explode at 40 trillion, 50 trillion, 60 trillion? Do you think we can get it all the way up to 100 trillion before the debt bubble explodes, before we have to be accountable again? Look, at the rest of the world is tired of the U.S. just printing dollars and sending the rest of the world dollars for their goods and services that they send us, right? That's the only thing we produce in the United States anymore is dollars. Okay, so let's get back to the housing market. Now, do I think that this bubble is going to break like 2008? Well, you see, they never let the 2008 bubble completely deflate. No, they couldn't handle the pain. We cannot handle the pain. Jerome Powell cannot handle the pain. He's going to print the money. He's going to get that. He's going to lower the rates. He's going to pivot because he can't handle the pain that's coming. But at some point, this will blow up. We can't go on like this forever. At some point, you will feel the pain. Now, will it be this year? Will it be next year? Will it be the year after? I'm not really sure. But I do think within the next 3 years, this thing will be really ugly really fast. It's a disaster, and it's going to happen. And a lot of people don't want to hear that, but that's just my take. Now, your take is maybe this modern monetary theory where we can print money, 50 trillion, 100 trillion, 200 trillion dollars. Maybe we can keep it going, and the rest of the world won't notice what we're doing. They won't notice that we're printing all this money and making the dollar completely worthless. You tell me where you think it's going to end. Now, your guess is as good as mine. I'm just a guy with a computer. I got a microphone, and I like to talk. Anyways, if you like this stuff, give me a thumbs up. Why not? I'm Tall Mike. If you really like it, hit the subscribe button. I got some good stuff to talk about this week. Get out there. Have a great Monday, everybody. We'll talk again real soon. Bye-bye now.